A lot of big things happen over the course of the year. Marriages, divorces, new jobs, new kids, and all of them affect your taxes. Here to explain how these life-changing events can increase your tax refund is Lisa Green-Lewis, CPA and tax expert at TurboTax. Welcome, Lisa, and tell me, how should investors keep track of all these life-changing events because it will affect their taxes?
All of those things can really help your tax refund, and so it's great to keep track of any receipts related to things that are tax deductible. I always, at tax time, I keep a file near where I get my mail, and anything related to taxes, I just stick it in that file, so when I'm ready to sit down and do my taxes, I have everything all in order.
Okay, let's start off with marriages. What do newlyweds need to know come tax time?
Newlyweds need to know that typically when you're married, you receive some great tax benefits compared to when you're single. You receive lower tax rates. If you claim the standard deduction is bigger for married people. So for instance, when you're single, the standard deduction is $12,200, and married filing jointly is $24,400. So you receive a bigger tax break there. And when you're married also, there's some tax breaks that you can claim together.
And what about divorcees? What do they need to know?
So new this year, if you got divorced in 2019, you can no longer claim the alimony that you pay. And then the recipient as well, they no longer claim that income.
And what about if you lost or started a new job? That's a big life change.
Yeah, so if you lost or started a new job, unfortunately under tax reform, you can no longer deduct job search expenses, but on the same note, you should look at your W-4 form and adjust your W-4 if you've had changes in your job. There's a new W-4 form with the IRS, and they require you to fill that out if you have a new job.
And what about in case of a windfall? If you hit the lottery or you inherit a lot of money, how will this affect the tax paying process?
Yeah, if you won the lottery or had a windfall, you have to make sure you claim that income on your taxes, and it could also bump you up into a higher tax rate. So you just have to be aware of that and maybe you can make a smart move by April 15th and contribute to your IRA to lower the taxes that you owe.